One person should pray for us.
So let's all be in a mood of prayer. Oh God, we thank you once again for what you have done for us and what you are still doing for us. Daddy, we are about to start learning. We pray that will give us the retentive memory, the one that's whatever will be taught here, it will stick in our minds, so that at the end of the day, glory and good things will be ours. Father, we thank you for our tutor. We pray that by the end of this lesson, we'll have the good understanding. This and other things we ask through Christ, one God, forever and ever. Amen.
Amen.
Okay, so this is the question: private medical practice. In fact, it's been a long schedule on budget. We talked about the functional budget. We talked about the flexible budget. We came to preparation of the master, the cash budget, and then we came to the master budget. We've done a lot on budgeting. Today, we are drawing the curtain on budgeting. After solution to this question, I'm sure with all the questions we've solved and then the tricks I've showed you, you go and sit down and then you go through well, then you strengthen your budgeting. We will move to decision making. And like I said, decision making, the questions are many. So because I don't want you to struggle, I've extracted all the questions and put them together in one document for you. So by 12 o'clock afternoon today, I'll release that document for you in PDF so that maybe you can print them ahead of time so that immediately we are discussing is question by question. So nobody will struggle looking for a question, then it will move. Is that right? Because decision making tool doesn't take a lot of time to solve. So in fact, sometimes we can even solve 3 questions in a meeting. Sometimes you can even solve 3 questions. So my expectation is that by end of by end of January, we should have finished tackling decision making and started with variance to a level. Then variance, the same thing. I'll compile the questions and release to you. We tackle them and finish. Then we tackle performance evaluation too and finish. Then the last thing we'll do is those theoretical areas, contemporary issues. I'll look at the balance scorecard, the value chain, benchmarking, total quality management. I mean, all those things, we'll look at them very well so that you'll be in a very strong position to go and pass the
Amen.
three medical practice. The question says, a private medical practice based near Mount Adaklu has 5 full-time doctors, 5 full-time assistants, and 2 administrators. Each doctor treats 18 patients per day on average. The medical center is open for 5 days each week and 46 weeks each year. Now, the requirement says we should use the information provided to present a statement of profit or loss for the medical practice for the next year. Ignore effects of inflation. So we are preparing a budgeted statement of profit or loss. So let's go through it. They say each doctor treats 18 patients each day on average. So 18 patients per doctor per day. Then they said the medical center is open for 5 days in a week. So times number of days in a week, 5. And then 46 weeks in a year. So the first thing we have to do is to determine the number of patients. So you leave a page for your budgeted P&L. Leave one page for your budgeted P&L. On the board, I'm solving the workings directly. So leave one page for your budgeted P&L. Then the next page, let's go and tackle our workings. So working 1, the number of patients. I said each doctor treats 18 patients each day on average. So we have number of patients per doctor per day. 18 patients per doctor per day. So since it's per doctor per day, it means you have to multiply by number of doctors and number of days. Is that clear?
Yes, sir.
Multiply by
Yes,
number of doctors. How many doctors are there?
5.
5 doctors. Then you multiply it by number of days. So number of days. They give us days per week, right?
Yes.
Number of days per week. How many days per week?
7.
The question gives us 5 days.
5 days.
So it's open for 5 days each week. Then since it's per week, we also multiply by number of weeks. Anything they give you per, it means you have to multiply it to clear it off. Is that clear?
Yes,
Yes,
sir.
sir.
Yes, sir.
46 weeks. So multiply all this and let's see. Multiply all this and let's see.
2700.
20.
700.
700.
So we have 2,700 patients. 2,700 patients. Now, they told us that charges for patients vary according to the age of the patient and the number of treatments provided. So we have adults below 65 years of age, and then children and individuals aged 65 years and over. So we have 3 groups. We have adults who are below 65. Then we have children, and then we also have individuals who are aged 65 years and above. So we have the aged, then we have children, and we have adults. Are you getting it?
Yes.
And then they said no treatment and consultation only. They're giving us the prices. Then the patient mix and the treatment mix are as follows. So now the patient mix, they are telling us that adults is 45%, children is 25%, and then over 65 years, that's the aged, is 30%. So let's do the mix here. So the patient mix. Let's do the patient mix as our working tool. Out of the 2,700, they said adults constituted what? 45%, right?
Yes.
Yes.
What is 45% of 2,700? What is 45%?
9315.
9315. Children will constitute 25%. Give me that 25%.
5175.
5175. And then aged, that's over 65 years. They contribute what? 30%.
6210.
6,
6210.
8,
210.
6210. So when we sum all of them, this is 100%, so it is equal. Give me the total of this. Is it equal to the 2,700?
It should be, yes.
Yes, please.
Yes, so that shows we are correct. So 2,700. So this is how the patients are given. Then they said, yes, the treatment mix. So you see the treatment mix, they are telling us that 20% are for no treatment, 70% are for minor treatment, and then 10% are for what? Major treatment. So let's also do the treatment mix. Let's also do the treatment mix here. Let's also do the treatment mix. Treatment mix. So let's say the 3 groups are adults, children, and then aged who are more than 65 years. Now, the question said no treatment, minor treatment, and then major treatments. He said no treatment is what?
20%.
First of all, get all of them, their totals first. From the patient mix that we did here, adult is what? 9315, right?
Yes.
So the total of the adults is 9315. Total of the children is 5175. And then total of the aged is 6,200. Now, out of this, they are now telling you that
6210.
3210.
6,210. So they said no treatment is what? 20%. So you are taking 20% of the 9315. Take that for me.
1863.
1863.
63.
1863. Minor treatment is what? 70%. So take 70% of it. 6521.
6521.
What about the 10%?
532.
Let's go to children. 5175 times 20%. I'm getting 1035. Is that right?
Yes.
Then what about 70%? What about 70%? 3623.
366. Yeah, 3623.
What about the major treatment? 10%? To give us 518, right?
518.
What about no treatment? 20%? That's what? 1242, eh?
Yes.
Am I right?
Yes.
Yes. Yeah.
What about minor?
4347.
26210 times 0.7 is 4347, right?
Yes. Yes, sir. Yes. 621.
And that's 621.
621.
Okay, so these are the treatment mix. Now they've given us the prices too, and they said the prices charged. So let's also look at the prices charged. So prices charged. Yes, so the same thing, adults, children, and then aged who are more than 65. Yes. They said no treatment. For no treatment, what happens? No treatments. Adults are charged what? 50, eh?
Yes.
50.
So no treatment. Adults
Yeah,
are charged
56.
50 days.
50.
Children and then aged, they are all 30, eh?
Yeah.
Yes,
So
sir.
30 for this. 30 for this. What about minor treatment?
200 for adults. And then
Adult is 200. Children
And
and aged are
120.
120. So 120 for both of them. What about major treatment?
600.
So what's the meaning of the no treatment?
That means consultation. They come to the hospital for consultation only.
Okay.
Yes, major treatment. They are taking what? 600.
600. 280.
600.
Okay, so if this is that once we've gotten the revenue and we've gotten the number of patients, the price and the number of patients, we can quickly calculate the revenue. Is that clear?
Yes,
Yes.
sir. Yeah.
So for adults, children, and then aged over 65 years. Now, for no treatment, it is 50 times the number of people here, 1863. Can you see?
Yes.
Yeah.
So
93, 150.
I'm coming. So we have, so for no treatment, yes, for no treatment, what we need to do is that the price for adults is what? 50. So 50 times the number of people for adults. 1863 times 50. Giving you what?
93,150.
93,150. Is that right?
Yeah.
Who said?
So 93,150. Then for children, it is 30 cedis. So 30 cedis times the 1035.
31,050.
Please, do you understand how I'm getting the revenue? I'm
Yes,
multiplying
sir.
each person's price by the number of patients there. So children to 30 times 1242. Give me 37,260, eh?
Yeah.
What about minor treatments? Minor treatment, adult is 200. So 200 times 6521. Give me
1,304,200.
1304,200.
Yeah.
1304,200, right?
200. Yes.
And then children is 120 times the number of traces 23. 434760, right?
Yeah.
Yeah.
Yes, sir.
What about aged? 120 times 4347. 521640, right?
Yeah.
Yeah.
What about major treatments? We have 600 cities. 600 cities times 932 people. 559,200. Am I right?
Yes, sir.
Then children, we have 280 times the number of people is 518. 145040. Am I right?
Yes, sir.
Then at aged is also 280 times 621. I'm getting 173880. Is that correct?
Correct.
Yes, sir.
So this is the revenue. Now let's go back to our question. So since we've gotten revenue, let's go and look for expenses. Now the expenses there is the salary of each doctor is 240,000. Assistants earn 100,000 and administrators earn what? 80,000. So let's go and do salaries. Let's go and do salaries. Working 6. Salaries. Yes, they said doctors earn what? Each doctor earns what? 240,000.
240,000.
So 240,000. How many doctors do we have? 5 doctors. Then assistants. Assistants and what? 100,000. So 100,000. How many assistants are there? 5.
5.
Right? Then administrators. These administrators and what?
80,000.
So 80,000.
80,000.
How many administrators are there?
2.
2.
Please multiply them for me. 240,000 times 5 is what? 1,200,000. Right?
Yes.
100,000 times 5 is 500,000. This is 160,000, right?
Yes.
Yes,
So
sir.
what is the salaries total?
1,860,000. 1,860,000. Yeah.
Then they said what? In addition, everybody receives a bonus of 5% at the end of the year. So bonus of 5% of the total salaries will give you what?
Okay.
Yes.
93,000.
Yes, I'm listening to you. Please, the person
Look at
asked.
the preamble of the question where we pick the assistant and the administrators.
Yes. He said, Mount Adaklu has 5 full-time doctors, 5 full-time assistants, and 2 administrators.
Okay. Thank you.
Are you okay?
Yes, please.
Okay. So 93,000. Yes. So when we sum all of them,
1,953,000.
1,
1,953,000.
120,000.
so that's the total. And it's the medical practice expects to pay 414, 300 from us, another fees cost. Okay, so materials, another fees cost. They are constant figures, so we don't need to work them. So we can come up now and prepare our statement. So we can now title it private medical practice. Okay, so budgeted statement of profit or loss for next year. So we have the type of products that they offer, or the type of sales are for what? Adults, children, and then what? Aged, right?
Yeah.
Yes.
Let me say adults, children. Let me come forward a bit. Adults, children, aged, and then total. So let's look at revenue. Where does the revenue come from? The sources are from what? No treatment. You see, every day I'm following the same strategy, right? I
Yeah.
put down my types
Okay.
of products and then the sources of revenue. Is that clear? So
Yes,
no
sir.
treatment, minor treatment, and then major treatment. Yes, so the revenue we calculated. Let's go and copy them down. Yes, so please, can somebody screenshot it and mention them for me? This is the revenue. Can somebody screenshot the working 5 and then mention them for me? Have you taken it?
Yes, sir.
Yes.
So it's just a matter of copying what you have there. Adults is what? 93.
93,150.
150.
150.
Children,
31057.
31,050.
more than 65 years.
27.
37,260.
What about minor treatment? Minor treatment.
1,304,200.
Children,
4,347,60.
aged,
5,216,40.
major treatment.
5,592,100.
Children,
1,450,40. 1,738,80.
you see, so sum the totals for me. Sum the totals for me. Sum the totals line by line for me. Plus forward 93,150 plus 31050 plus 37,260. I'm getting 16. 1460.
460.
Yes.
1304 260. 434 760. 521 640. I'm getting 260 660.
Yeah.
Yeah.
260 660. Then 559 200 plus 145 040 plus 173880. Normally,
878120.
normally for sub questions in the exam for sub
So the
sub
minor,
questions,
the minor is supposed to be 2260600. The first one, the adult, is 1304200, but I think you calculated 260.
oh, okay. So this was 600. Okay, let's go. Then the major give us what? 878120, right?
Yes.
Yes.
So for such questions in the exam, so normally use double pages to solve it. So when you get time, you can solve these totals. I wouldn't need them for now. All I need is the total here. So this is the total revenue. So sum that total from 161460 plus 2260 600 plus 878 120. I'm getting 33
00180.
180, right?
Yes.
330018.
So that's total revenue. Then let's go to the expenses. So the expenses, I think we worked on salaries. I think we worked salaries in working on or something. We got what?
Salaries only 1.860. Okay. Together with the bonus, okay.
Then there was fixed cost. There's a material cost and then other fixed costs. Material cost from here is what? 414,300, eh? Can you all see?
Eh.
Then other fixed costs.
733 600.
There is some more. What's the total?
Three million
310
100,900.
900.
So this is the total expense. When you take it out, what's the net profit? What's the net profit?
199,280.
Are you sure? This is 33,110.
300.
It's
Yeah,
supposed to be,
supposed to
it's 33,00180.
So 3,300,180.
It's 33,018.
Yes.
So $33,00180. So what are you getting? 199.
280.
Okay, so this is our net profit. Do we understand?
Yes, sir.
So you see, look at it. We've solved the question in exactly 36 minutes, even with explanation. Even with explanation, we have solved the question in exactly 36 minutes. This will tell you that in the exam, so if you are very tactical, such a question, if you understand your principles and you have obeyed the instructions, within 20 minutes, you should clear this and take your marks. Always make sure that you ask yourself, what are the products that they offer or the services that they offer? List them. So, for example, in this case, the services are for adults, children, and then what do you call it? Aged. And then the sources of revenue are from no treatment, minor treatment, or major. So do you know that another person can understand it that the types of products are rather no treatment, minor, and then major, and put them here. Then you put the children, adults, children, and aged here. At the end of the day, they will get the same result. Do you know that?
Yeah.
So you see, it's about understanding. All you need to know is that there should be types of products and then sources of revenue. Are you getting it? So you
Yes.
break the total number of units into what? Various types of products and then various sources of revenue, and get the prices for each source of revenue and multiply them to get your total revenue. So get the strategy right for your total revenue. You see that always the expenses are simple. Or the expenses that they will tell you variable cost, fixed cost, you know them already. But the problem is with analyzing the revenue. Are you listening carefully?
Yes.
The problem is always with analyzing the revenue. And to do that, split the total number of units into various types of products and then various sources of revenue. So you get the number of units for all the types of products and then the prices charged for the various sources of revenue. Is that clear?
Yes.
Yes, sir.
Okay, so those who have been taking the screenshots, let me come down for you and do your job. Yes, those who have been taking the screenshots, start from here. Take screenshot for working number 1 for us. Immediately you take the screenshots after the lesson, you must post it. Don't wait for us to call you. The number of calls I'm receiving is too much. Don't wait for us to call you. You took screenshots. Immediately you finish, post it on the page. Please, are you done with this? Those taking the screenshots, are you done?
Yes, sir.
So take working number 2 and 3. Take working number 2 and 3. Are you okay?
Yes, sir.
Take working number 4 and 5. Can I move?
Yes, sir.
Take working number 6. Can I move?
Yes, sir.
So take the statement. Are you okay?
Yes.
Yes, sir.
Are you okay?
Yes,
Yes,
sir.
please.
Okay, so this has drawn the curtains on budgeting. Now I'm going to introduce you to short-term decision making. So that when we come to solving questions, nobody will be asking questions to waste our time. So let's short-term decision making. Now, this is a 20-mark question in the exam, so you don't need to joke with it. Now, to know about decision making, you first need to know what relevant cost is. Relevant costs for decision making. Now, when we say relevant cost, we mean that relevant costs, it refers to costs that changes as a result, let me say, as a direct result. Cost that changes as a direct result as a direct result of a particular decision. You see, if you are trying to make a decision and there are some costs that, based on the choices you make, they will affect the decision, those are the costs, we call them relevant costs. Are you getting it?
Yes.
So any cost
Yes,
that will
sir.
change the direct result of a particular decision, we call them relevant costs. And these are the examples of relevant costs. Examples of relevant costs are these: variable costs, the normal variable cost, we have what we call specific fixed costs. Specific fixed costs. We have what we call incremental fixed costs. Incremental fixed cost. We have what we call differential costs. Differential costs. We have what we call opportunity costs. Opportunity cost. Lost contribution. Lost contribution, etc., etc. I will explain all of them, etc., etc. So these are costs we call relevant costs. These are costs we call relevant costs. I believe you are writing.
Yes.
This one you have to write to. Very, very important.
Yes.
These are costs we call relevant costs. Now, someone will ask, variable costs. You know what your normal variable costs are, right? Direct material, direct
Yes.
labor, direct expenses, and variable overhead. Is that clear?
Yes.
They are generally relevant. Then specific fixed costs. When we say specific fixed costs, look at this. If they tell you specific fixed costs, specific fixed costs. What specific fixed cost means that it is a fixed cost that will be incurred, a fixed cost that will be incurred only, the network has started though, only as a result of that decision. Only as a result of that decision. For example, let's look at it. For example, if you go to school, you will incur material cost and you will incur rent cost. So if you go to school, you will incur material cost of 100 and you will incur rent cost. The rent cost is fixed. Let's say you incur rent cost of a fixed cost of, let's say, 150. And then if you go to church, two options: if you go to school or if you go to church. If you go to school, you incur material cost of 100, you incur rent cost of what, 150. But if you go to church, you will incur only material cost of 100. You will incur rent, the fixed cost. So the rent will be called a specific fixed cost because it is specific to only going to school. Are you getting the point?
Yeah.
Please, are you understanding it? Hey,
Yes,
I
sir.
need.
Yes, sir.
Yes, sir.
We are following you.
So you will see that at the end of the day, if I want to find a reason to either go to school or go to church, that rent is going to affect my decision, true or false?
Very true.
Because I'll
It's
say
true.
I prefer to go to church because should I go to school, I will incur a certain rent cost. So in general, when you are doing decision making and you come to relevant costs, fixed cost itself is not relevant. General fixed cost is not relevant. But this one is a specific fixed cost. It is specific to only going to school. So it is relevant. Are you getting the point? Because it will change the decision. Are you getting the point?
Yeah.
Yes.
That's what we call specific fixed cost. Then when we talk about incremental fixed cost, you see, incremental fixed cost, you are saying that an increase in fixed cost. An increase in fixed cost due to change in decision. So what we are saying is that the same example, going to school and going to church. Now look at the situation. Now, should I go to school? Should I go to school? Should I go to school? I'll incur materials of 300. Then I'll incur rent, which is a fixed cost of 400. Then should I go to church? Should I go to church? I'll incur material of the same 300. Then now I'll incur rent, which is the fixed cost. I'll incur rent of 500. Now, look at the two decisions. What is it in the decision that will influence your choice of going to school or going to church? What will you look at?
The rent.
The rent, the cheaper rent.
The extra rent, very good. So you see this rent of 400 and this rent of 500. The difference is what will cost, that's what will cause my decision to change. So the difference of 100, this difference of 100 cedis, that's what we call what? Specific, what do you call incremental fixed cost. Exactly.
Yes, sir.
If I change the decision from going to school to going to church, I'll incur, my fixed cost will increase by what?
100.
That's incremental fixed cost. Are you getting the point?
Yes, sir.
Please, do we all understand?
Yes.
Yeah.
Good.
Yes, sir.
Then we said differential costs. So differential cost is just like incremental fixed cost. It's a cost that differentiates between two options. Are you getting it?
Yes,
A
sir.
cost that
Yes.
differentiates between two options. So that one is in total form. So look at this. Incremental fixed cost is on only the fixed cost. But then when we say differential cost, we are talking about the cost that differentiates, between two options. So we are on total cost basis. This one is on total cost basis. It's on total cost basis. Assuming we have going to school, we have material 400. We have labor 600. We have rent, which is a fixed cost 500. Then going to church, you have material 350. You have labor 800. Then we have rent, which is a fixed cost, let's say 700. At the end of the day, what will be the total cost here?
1,500 for going to school.
1,500. And then this will be what?
1,800. 850.
So the difference between the 1,500 and the 1,850, the difference between them is how much?
It's 350.
350. Are you getting it?
Yeah.
So the difference of 350 is the differential cost. Are you getting it?
Yes, sir.
So that is on total cost base. When you analyze total cost, the difference between them is what we call the differential cost. Is everybody okay?
Yes, sir.
Then when we talk about opportunity cost, when we talk about opportunity cost, so opportunity cost, we are saying that, yes, what is opportunity cost? This is what? A revenue that is being sacrificed as a result of choosing a particular decision. Are you getting it? You see, when you choose a particular decision, any revenue you lose as a result of that is called opportunity cost. So that one, we are talking about real revenue. We are talking about real. Where an opportunity really exists. Where the opportunity really exists. And it is sacrificed. And it is sacrificed for another event. The benefit forgone in that opportunity, the benefit you have forgone in that opportunity is what is called opportunity cost. It's what is called opportunity cost. So what we mean is that if the opportunity is really there, for example, now Mr. Mensah gets 500 each day as a result of teaching rush hour. Let's assume every day when I teach rush hour, I'm being paid 500 cedis. Is that opportunity real or not?
It's real.
It's real because if I come to teach, I will get that 500. Let's assume every day when I teach rush hour, I'm being paid 500 cedis. It means that at any day I decide to teach rush hour, then automatically that my 500 cedis is guaranteed, true or false?
True.
Now, if on a particular day, Mr. Mensah decides to teach another student one-on-one. The benefit of 500 cedis that is forgone from rush hour. The benefit of 500 cedis that is forgone from rush hour is an opportunity cost. Is that clear?
Yes, sir.
So you see, I have lost the opportunity to gain that 500. So since I have lost the opportunity to gain that 500 becomes what? An opportunity cost. Are you getting the point?
Yes, sir.
Yes.
There is a difference between opportunity cost and notional cost. Now, notional cost is where the opportunity is existing in your head, but it's not real. Are you getting the point?
Yes.
Every morning, 4 a.m., I have been lecturing rush hour. I don't go to what do you call it? Let me say, I don't go to space to go and work and get 1,000 Ghana cedis. Are you getting the point? At 4 a.m., it's either I sleep or I do rush hour. I don't go to space to go and work there and get thousands. Therefore, if somebody contracts me on a particular day that don't do rush hour, use that period to teach me one-on-one. Then the money I'll get from rush hour, which I've sacrificed, is an opportunity cost. But I can't tell the person that, hey, the time I'm using to teach you this rush hour, somebody can contract me to go to space and get 1,000 cedis. So that 1,000 cedis is an opportunity cost. No, that is a notional cost because I'm only assuming. Are you getting the point?
Yes.
I'm only assuming. On a normal day, nobody takes me to space during that time. So the opportunity doesn't exist. Are you getting the point?
Yes.
Do we understand?
Yes.
Yes,
Yes.
sir.
So opportunity cost is something that ordinarily you would have benefited that time for which you are sacrificing for another thing, then that becomes opportunity cost. But if the thing doesn't exist and it's only an imagination in your head, then it becomes a notional cost, and notional cost is not relevant. So you should know that. So that is opportunity cost. Then we have what we call the loss control. Can I move?
Yes.
Yes.
Now, when we say lost contribution, it also acts just like opportunity cost. Lost contribution, it also acts just like opportunity cost. It also acts just like opportunity cost. So let's say we produce and sell 200 bags every day. Every day we are able to produce and sell 200 bags. Now, we accept a contract to produce only 150 bags and okay, so we accept a contract to produce only 150 bags for a customer on a particular day. $150 for a customer on a particular day. You see, our normal selling price, our normal selling price, normally when we produce the 200 bags, our normal selling price is 100 cedis. But the selling price for the order of 150 bags but the selling price for the order of 150 bags is, let's say, even 120, even if it is higher. You see, we have been charging our normal selling price 100 cedis. Then somebody came and said, oh, that day, please don't work. Don't work. Use the time to prepare 150 bags for me. So you prepare only the 150 bags and then you close. If you prepare only the 150 bags and you close, do you know that because under normal circumstances, that time you've been using it to prepare 200 bags, and today you are using the same time to prepare less than that, 150 bags, then the revenue from the extra bag, you have lost it. Is that clear?
Yes, sir.
So the company
Yes.
loses the benefit from an extra 50 bags. Are you getting the point? So that extra 50 bags, the revenue you've lost from it, how much will it be? Is it going to be priced on the 100 or the 120? Yes. Will you price it on the 100 or the 120? Your normal selling price is 100. Somebody has given you a contract that you should prepare 150 bucks for you and you will pay 120. So because of that, you've lost extra 50 bucks. Now that extra 50 bucks, the money you've lost from it, will you quantify it at 100 cities or 120 cities?
100.
100.
Very good. 100 cities, very good. Because under normal circumstance, you've been charging 100. If you were working that day, you would have charged 100. So that's 5,000 cities. That 5,000 cities is a loss contribution. It's a cost. Are you getting the point?
Yes, sir.
So you see how greedy businessmen are. He was charging 100, but the 2020 benefit he has got to know the own kind of, they will say that people work for profit. That's why business exists. They will tell you that business exists to make profit. So if they will get extra benefit, that one they don't care. But the one that they are losing, they will tell you it's a cost. Are you getting the point?
Sir, but does it also make business sense?
You say, does it make business sense?
Yes,
Of
sir.
course.
Already.
Of course,
Okay,
it
so
makes business sense. That's why I intentionally give. Of course, it makes business sense because the question you need to ask yourself is that 150 bucks you are producing for the person, does it look like the normal one you are producing? Do you get the point?
okay.
That is what the question didn't tell you. So in decision making, I intentionally gave you this question. In decision making, what you should think about is don't assume what the question has not told you. Are you getting the point?
Okay.
Please, are we listening?
Yes, sir.
To be a good decision-making student, never assume what the question has not told you. Is that clear?
Yes, sir.
In fact, what my brother is assuming now is that, but the normal thing you have been charging 100. So if I'm rather giving you 120, at least I'm doing you a favor. But the question is that, how shows that, what shows that the 150 bucks I'm producing for the person, it is almost the same as what I'm producing for the new person. You know that every special order, it doesn't look like the normal one. You know that.
Yeah.
If you go to, what do you call it? The restaurants, food that they sell on a normal day, the one they sell to all customers on a normal day. In fact, on a normal day, they can even serve 100 plates. Maybe a customer come in the morning, afternoon, maybe the whole day, they've served 100 plates of a particular food. Let's say the same food, if it is fried rice, 100 plates of fried rice. Are you saying that the particular fried rice that they served for the ordinary customers, if somebody is having a wedding and the person called them that day, produce that 100 plates for me, are you saying the quality is going to be the same as what they've been selling every day?
No.
You
No.
get the point. So these are
The taste
yes,
will change. The taste will change.
good. These are issues the question will not tell you. Are you getting the point? These are issues the question will not disclose to you. Are you listening? So
Yes.
the issues that the question will not disclose to you, you must not think about them or assume them in your calculation. Are you getting the point?
Yes, sir.
Yes.
But then, when you finish solving the question may ask you to tell them other factors that can affect the decision. We call them qualitative factors. Qualitative factors.
Hello, sir. Hello, sir.
Yes.
The loss contribution we just calculated.
Yes.
So if we look at the 150 bus that
Yeah.
the customer has ordered to be
Yes.
sold at 120, we will be getting 18,000. But
Yes.
on our normal day production, we'll be getting 20,000. So I'm looking at why not take the difference as the loss contribution, but we are rather taking.
You say on a normal day, on a
Yes,
normal day, when we sell, we'll get what?
we'll get 20,000. The 200 bars by the 100, we'll get 20,000. But with the special order, we'll be getting 18,000.
18,000. No, that is not what we are talking about. The special order that you said we'll be getting 18,000. We are getting 18,000 because the number of bags we are producing are less. Are you getting the point? Are you getting the point?
Are we looking at quantity or are you looking at the prices?
You look at both quantity and price. That's why I'm saying that the number of bags you are producing are less. So because the number of bags you are producing are less, you are making revenue of 18,000. But what are you losing at that point? The only thing you are losing is the 50 bags you have not produced. That's what do you call it? The 50 bags you have not produced. That's what you are losing. If you are looking at the extra 50 bags multiplied at the price of 120, you are making a mistake, because if you have produced that 50 extra bag, will you sell it to the public at 120? Hello?
You will sell it at 100.
You will sell it at 100. So what you are losing is the 50 bags times 100 cedis. Are you getting the point? Are you getting the point?
I get that point. I get that point. But I'm looking at the total revenue that one would generate from the
So
production.
this is what I talked about, that in decision making, don't assume what doesn't exist. Watch. On a normal day, you've been producing 200 bags. The 200 bags, who do you sell it to? Is it not the public you sell it to?
Yeah.
You've been selling it to the public.
Yes.
At what price? 100 cedis. So if you've been selling it to the public at 100 cedis, it means that the 100 cedis is what is rare. Any other price is not rare. Are you getting the point?
Yes.
Yeah.
So somebody came to you, and then the person buys all the he buys 150 of the bags at 120. So assuming you decide that you don't want to you don't want your machine to work under capacity. So instead of the 150 bags, you produce 200 that day. You went on and produced 200. The 200, the person will come and take his 150 out. When he takes this 150 out, the extra 50 that will be left, who are you going to sell it to? You will sell it to the public, right?
Yes.
If you sell it to the public, are you going to sell it to the public at 120 or at 100 cedis?
100 cedis.
You sell it to the public at 100 cedis. That is what is rare. So that rare opportunity you are losing, that's what we call the loss contribution. That's why I said it's almost similar to opportunity cost. If you sell it to the public at 120, they may not even buy, irrespective of whether it is a special one. They will not buy it, because they know that every day when we come and buy the thing, we buy it at 100 cedis. Here is the case today. Somebody has come to order. When the person order, you've done it for the person. The one that is left, at least which we, your loyal customers, what you are saying, somebody can also argue that, okay, then we, the loyal customers, we must also benefit from it. So why will you give it to us at an increased price? Are you getting the point? Are you getting the point?
Yes, sir. I'm getting.
So that's why I'm saying that in decision making, to avoid controversy in your solutions, don't assume what doesn't exist. Are you getting the point? What the person has not told you, you don't assume it. On a normal day, your selling price is 100. So anything you are losing is on the 100 cedis. Are you getting the point? Are you getting the point?
Yes, sir.
Yes.
So that should settle it. Now, we are talking about other factors that can affect the decision. What we mean is that other factors that are not monetary figures, they are not part of the question. They don't affect the revenue and the cost, but they can also affect the decision. For example, look at this. If I'm producing, then every day I produce 200 bags. Now somebody has come to me and say I should produce 150 bags for him. It means that my customers who have been buying the first 150, they are not going to buy that. They don't get a chance to buy that 150 again. Is that right?
Yes.
Yes.
In a way, I'll sell it to the person and make my profit all right. But don't you think it will also affect my business in a way? Customer loyalty, is that not it?
Yes.
Yes, sir.
Yes,
If
sir.
I've been eating at your restaurant every day before I go to work. In fact, every morning by 7:30 when I get there is hot meal I'll buy and eat, and it will safeguard me to go to work. And then some days I come and then you tell me, oh, that day you are preparing order for somebody, so you are not cooking. Really, for me to walk hungry to work, if it continues like that, what do you think will happen? Your customers will start moving to another place. Are you getting the point?
Yes.
So all those factors can affect what? Your decision. You say what? Customer loyalty. Customer loyalty. Yes. If you are producing the product too, we can look at what? The quality of the product. Somebody will say, what about the quality of the product? All those things. Any other thing that you think can affect the decision, but it is not part of the monetary figures. We call them qualitative issues. We call them qualitative issues. Qualitative issues. Assuming you have the chance to produce something in your company, then now you've taken a decision that I don't want to overspend my machine. So I won't produce it again. I'll buy it from an external supplier. If you are buying it from an external supplier, what you need to think about is, will he produce it for you at the same quality? Are you getting the point?
Yes.
Yes, yes.
You also think about on-time delivery, on-time product delivery. Would the supplier be able to supply on time? Are you getting the point?
Yes.
On-time product delivery. What is the probability that he will give the thing to me on time? Now, the nature of the branding, do you know that there are some people, when you give them contracts, they will tell you that, no, even though you have given me the contract, whatever I prepare, I'll brand it using my name. Do you know that?
Yes.
Do you know it can also affect your business? Because it's like,
The
look at
profit.
this. Look at this. Let me give you a real life scenario. Somebody from the US, a friend from the US came down and then he was telling me this, and I said, this is how white men see business. Look at this. Do you know that these people, Samsung Galaxy, do you remember that when this, what do you call it, smartphones started popping up, Samsung started Galaxy A20, A21, when they started their series, multiple series, the A series, they will do plenty, S series, they will do plenty. When they started that, you realize that their battery was not strong, true or false?
Yeah.
At the beginning when they started, you can buy a Galaxy phone, you are using it, within 2 hours, the battery goes off. And then, these days, do you face that? The new Samsung phones that are coming, their batteries are strong. You get the point?
Yeah.
So at the time, Nokia and then Samsung, the difference between Nokia and Samsung is that people were arguing that as for Nokia, their batteries last longer. Samsung batteries do not last long and the rest. And somebody told me confidentially that, look, this is what Samsung did. When they realized that their batteries do not last longer, but they make superior phones than Nokia. So you know what they did? They contracted Nokia that, you know what, we are giving you a special contract. We will pay you heavy amount of money. What we want you to do is, prepare batteries for you, manufacture batteries for us. Then we will use that batteries to design our phone. Are you getting the point?
Yeah.
I've contracted you that you are good in producing batteries. So you produce very good and durable batteries for me, and I'll use those batteries to design my phone. Now, assuming when they did that contract, then Nokia decided that, okay, if they produce the battery, they'll brand the battery Nokia. As part of the contract, they agreed that if we produce the battery, we'll brand the battery Nokia. Do you know it has an effect on Samsung?
It's a very big one.
Yes.
Because it means that you come across a situation where you have Samsung phone, but the battery inside is Nokia. Do you know that if
Okay.
somebody even buys that phone from the market, the person may be tempted to believe it is fake. You know that?
Yeah.
So it
Okay.
is not that you wanted to see.
Imagine you go to the market to buy a Samsung phone. When they give the phone to you and then you open inside and check the battery, now it is Nokia battery that is it. The first thing that will come into your mind is the phone were fake, and you get the point. But maybe it is not
Yes.
fake. Maybe it is not fake. Maybe that was the agreement. The agreement was that Nokia should produce the battery and customize it Nokia and then give it to Samsung. So all these things affect the contract. The contract I'm going to give to the person. What are the terms of the contract? Is he going to brand it using his own brand? If he will use his own brand, then it has an effect on my business. All these things, those are what we call qualitative issues. Are you getting the point?
Yes, sir.
Yes, sir.
So in exams, this is what we call professional marks. The examiner has not told you to provide qualitative issues. Now, I'm hearing only two people's voices. I'm coming. You know me, I'll mention names. Those whose voices I'm not hearing, what is happening to them? Yes, I'm going to call the roster again. I've seen them. They put their whatever off. They put their mics off. I want you to contribute. The rest of you who are not talking. Yes, Yao and Co, Clement, Estana, Amelie Hammond, Francis, Galazier 78 for Dankwa and Co, Phil, and then the rest. Why have you muted yourself? You are not talking. Contribute to the discussion. Because in our next meetings, we are going to start solving the questions on decision making. And these things are going to appear in there. So that is not the time when we get there. You will now be telling me, say, why are you saying this? Why are you saying this? Because we finish solving the question, I'm using the rest of the time to explain to you what to expect in decision making, so that when you go there, you don't struggle. So I expect you to contribute. Yes, what are they? Gloria, John Botry, Julius Bliss, Nyaniba, and the rest. Why have you muted yourself? Talk. we are making a discussion. This is an interactive discussion, so get involved. What I'm saying is that, you see, there are some issues that you don't consider, but then those issues is very, very, very possible that they can affect your company, or they can affect your decision in the long run. For example, you go to exams, and then the examiner gives you a question that, okay, this question is a make or buy decision. Now, it asks you, in the terms of the question, that should you make the product in-house or should you buy it from an external supplier? Then you used your decision-making techniques to analyze the question, and you concluded that you should buy from an external supplier. Even though the question did not ask you to provide qualitative issues, you as an intelligent student, after solving the question, you can go ahead and say, the following qualitative issues are also worth considering. Now, if I'm buying the product from an external supplier, what are some of the possible things that I may think about? One, I may think about concern for quality, whether the external supplier can produce the thing to me at the same quality I want. Is that right?
Yes.
I will also think about the fact that, can it deliver the thing to me on time that I'll be able to put it into my own product and sell, that it won't affect my business? If I have been producing a thing in my company within 2 weeks, then I put it in the final product to sell. Now I have contracted you, produce the thing for me. It is taking you 3 months to deliver. Are you not destroying my business?
Yes. Yeah. Yes.
So you see, I will also think about on-time product delivery. Will it be able to deliver on time? Now I'll also think about the nature of the branding, the thing that is producing for me. Is it going to brand it using its own, customization? If that will happen, it also has an impact on my business. I need to think about that too. Are you getting the point?
Yes.
I also need to think about the fact that now that I have agreed with the person that I'll be buying that particular component from the external supplier. Now, what is the probability that that supplier will always be there to supply for me? He won't breach the contract at any point. You know, it's also very important.
Yes.
Because imagine if you've relied on the person, and so even the machine you've been using to produce that special equipment, maybe you've even disposed of the machine. He keeps on producing and producing for you. He keeps on producing for you. Then at a time, he decides that no, he has stopped the production. Do you know it can cripple your business at once?
Yes. Yeah.
Yes. Because here is the case, the machine you've been using to do that, you sold the machine. After I sold the machine, then you came to me and told me, after I sold the machine, you came to me and told me that you can't produce for me again. It will affect me. So I need to think about all these issues, the customer loyalty, whether the contract will be maintained, and even confidentiality. You know, some contracts, they require a lot of confidentiality. You know that?
Yes.
And so if you are the type that having that agreement with you, it is possible you can divulge that information to a third party, then why will I contract you? So maybe per the calculation, it is good. The contract may be profitable to me, but I also need to think about the fact that, hey, this guy, maybe it's not confidential. He can easily divulge information. So do you know that one can also have, it can influence me to change my decision?
Yes.
Yeah.
And so look, when we're younger ones and we're coming, even till now, when we've completed school and the rest, we had some family relations who were big men. We were expecting that ordinarily they'll give us jobs in their companies, right? Some of them were managing directors, some of them were CEOs. We were expecting ordinarily that due to family relations, it will be easy for us. Once we finish school, I can go and see Brad too and talk to Brad too to give me a job. That was what we were assuming. But sometimes you approach these people and look, no matter the money you want, they'll give you on a particular weekend. If you are cash strapped and you call them, oh, uncle, there's nothing at home. Support me. He will give you. He can give you 10,000 cedis. He can give you 20,000 cedis, but he would never give you a job. Have you realized that?
It's there.
Yes.
Yes.
Why do you think they do that? If you are in the house, you would think, oh, they are wicked. They don't want to help anybody. But if you are in their shoes, what you are thinking, probably in the office, he's a managing director. And then probably the HR in the office, he has some connection with the HR. Maybe he's engaged in some fictitious deals at the office. Let's assume, perhaps Maybe he's doing some fictitious deals in the office and he uses the HR. So the HR has come into his house after work and they've been having tete-a-tete discussions about their movements they've been doing. And you happen to be in the house and you've been seeing all these things. However, you are the same boy who is not confidential. We know how everything you want to talk. If you are the one, will you go ahead and give such a nephew a job?
No.
When you know yourself that you and the HR, you have some connection, illegal connection that you are doing. And the boy is in the house, he has been seeing everything. Here is the same boy who doesn't know how to keep issues, he doesn't know how to treat issues confidential. Everything he likes to talk about. So you see, even though you love your nephew, you like him so much. If he even wants 50,000 to go on holidays to spend, you can give him that 50,000. But you will never consider giving him a job in your company. In fact, he may even lobby a job in another company for you, but he will not put you in his company. Why? Because he will have the feeling that, hey, let me be careful I don't go and put this boy there. So that whatever connection I have with the HR, he will go and be discussing it with his colleagues. At the end of the day, it is my information that is being put in public. Do you understand what I'm saying?
Yes, sir.
But the thing look very like you have some personal experience.
My brother, you want to put me in the tight corner. In fact, that is what they sometimes, when people make decisions, if you are not in their shoes, you will not understand why they make that decision. But when you come back and you look at it carefully, maybe a third party sits you down and tells you something. That is where you realize that, oh, okay, so this is actually the reason why. It happens every day. Politicians, why do you think politicians, when they get quality materials around them, they get people who are well educated, people who have integrity around them, they don't rather push those people to the top. They would rather like to use those boys who are not educated. Why? Because you who is well educated and you are smart, there is always that fear that you can dethrone them at any time. Are you getting the point?
Yes, sir.
So when they are dealing with you, even though they like you, they'll be careful. That is just by the way. When you come to the business sense, we are saying that you may be confronted with a choice to make a decision. Option 1, option 2, you are supposed to decide which one is better for you. Then you make your calculations. On the face of the calculation, you have concluded that indeed option B is better. But then you also need to look at other qualitative issues that can affect the decision so that you will safeguard yourself with those issues. So the best decision maker for a business is someone who will make the calculations and on the face of the calculations conclude that this decision is good for me. But then you also come back and identify some of the key threats to that decision. Then you will find out how to safeguard himself with those threats. So imagine your board of directors invite you to a meeting as the management accountant. Then they put a contract in front of you that, oh, we've received a contract from so and so company. These are the terms of the contract. We are supposed to do this, we are supposed to do this, we are supposed to do that. Then you analyzed everything and realized that the contract will be good for your company. And so you advise the board of directors that, oh, board, in fact, when I do this, I have come to a conclusion that the contract will be good for us. We should accept the contract. But you fail to tell the board that these are issues that can affect us. Confidentiality of the contract is important. Whether they will be able to deliver on time is important. The nature of the branding is important. You fail to tell them these things, only for them to engage in the contract, and then they've given the contract to the person. Hey, the thing was supposed to be delivered in 3 weeks, 5 weeks, 6 weeks, then it starts affecting the business. Do you know that at that point in time, they will start taking a second decision about you, that you are not competent? Are you aware?
Yes.
Yes.
Why? Because
Yes,
you are not a financial accountant. Financial accountant will only deal with the figures and work away. You are a management accountant. That's why they call you management accountant. It means that you are an accountant by skill, but you also have managerial experience. Are you getting the point? So management and accounting combined together. So whilst you are doing the accounting, we are saying that apply your managerial skills to apply the managerial wisdom to the accounting you are doing, so that you don't go and tell the board only the figures. Once you are a management accountant, you should also be able to suggest to us what are the possible things that could affect this decision, so that when you tell them, then the board can say, okay, if the delivery on time will be a problem, then let us get our own delivery trucks to go and carry them. Are you getting the point?
Yes.
Are you getting the... So they've decided that maybe the company is in Tema. Let's say the company is in Tema. The company is in Tema. And then the one you are contracting is in, let's say, Tamale. It's in Tamale. And then they have problem delivering the thing to you. So it takes time. If you draw the attention of the board can decide to situate their trucks near Tamale, a place close to Tamale. They situated their trucks there. So that immediately this company produces the thing, their trucks will go for it that day and then return it straight to what? Tema. Is it not beneficial?
Yeah.
So that is what we are talking about. Yes. So that said, let's look at how to calculate the relevant cost of various items which we will capture in our decision making. Let's look at relevant cost of material.
Hello, sir.
Yes.
Good morning.
Good morning.
Okay, and please, I want to ask for exam condition. If they give us only the quantitative, like to compare whether to make or buy, and if you want to chip in the qualitative characteristics too, without any information regarding it, how will you conclude in exam that though you can buy it outside? Hello, sir.
Yes.
Yeah, so please, I'm asking, in other condition where we weren't given information whether the company can be reliable in terms of confidentiality, delivery on time, and all this, how will you conclude in exams?
Good. I'm saying that you are supposed to do just the calculation for the examiner. But then I'm saying that as a way of professional marks, you can go ahead and tell the examiner, you have concluded, and your conclusion is that it is better to make the product in-house, or it is better to buy the product from an external supplier. So if you've concluded that way, you can say that the following qualitative issues are worth considering. Then you state about 3 of them. I mean, possibility for on-time product delivery, quality, maintaining quality, and then perhaps the nature of what? The branding. You just list about 3 of them. The following issues are also worth considering: nature of branding, on-time product delivery, and then perhaps confidentiality of the contract. 3, you have just put it there. In case, you see, we are human beings, so assuming you write the paper, after the examiners mark the paper, and then they realize that you have gotten 49. Let me say you got 49, exactly 49%. After getting 49%, if they are moderating and they review your paper, oh, this lady, if I look at the way she have answered the question neatly, her handwriting so good, and then she was able to address everything nicely, but she got 49. Oh, 49. In fact, look at the question 3, relevant costing. After she has done a neat work, she was able to tell us at least some 3 qualitative factors we should consider. The team can consider that and say, based on that professional writing you have done, let us give her the extra 1 mark to make the 50, and then you pass. By you sitting here, you may not know what actually passed you. Are you getting the point?
Yes,
Are you
sir.
getting the point? So I'm not saying the question will tell you all that. The question will not tell you that. As for the question, it will just give you the question for you to calculate and conclude. But I'm saying that as a professional student, after you have calculated and concluded, it is better to give at least some 3 qualitative factors, so that in case tomorrow you may need some 1 mark or something, they can dwell on that to give you professional marks. Are you okay?
Yes. Yes, sir. Thank you.
That is that. Now, let's talk about relevant cost of material. Now, relevant cost of material is that, materials, when you buy the material, we have what we call the book value. We have what we call the book value. Book value means that if already you have the material in stock, it may have a book value in your books. Place the material, we have replacement cost. We have replacement cost. That is the cost you spend to replace it immediately. Then, if later you have to scrap that material off, you also have what we call the scrap value. The scrap value. Now we are looking, when should you use these things? When do you use the book value? When do you use this and then that? If you want to value material, you ask yourself some questions. The question you ask yourself is, first of all, you ask yourself that, is the material in stock? Is the material in stock? That material you are talking about, do you have it in stock? Is the material in stock? You ask yourself that, do you have that material? The answers are two. It's either you have the material, no. It's either you don't have it, that is no. The network started misbehaving. Let me share another whiteboard. Let me close this whiteboard. I think you've taken everything. Have you taken all the important facts?
Yes, sir.
Yes.
Sir.
Close this whiteboard and share another one. Okay, let me use this. Yes, can you see?
Yes,
Yes,
sir.
sir.
Okay, so you ask yourself, is the material in stock? That means, do you have the material available in your company? If you ask yourself this question, the answer is going to be two. It's either no, you don't have it, or yes, you have it. Are you getting it? If you don't have it,
Yeah.
then you have to go and buy. So you buy
Buy.
the replacement cost. If you don't have it, then you have to buy at the replacement cost. Once you are buying, the replacement cost. Now, if you have the material, which is yes, you also ask yourself a question. If it's yes, you must also ask yourself a question. The question you ask yourself is that, is the material used regularly? Yes, you have it, all right. But is it something you've been using every day? So you ask, is the material used regularly? You ask yourself, this material, is it something I've been using every day? That one too. The answer is either a no or a yes. Are you getting the point? Are you getting the point? It's either a no
Yes, sir.
or a yes.
Yes, yes.
Now, if it is material that you've been using regularly, what must we do? It means that if you use it right now, you have to replace it. So if it is yes, then you have to buy at the replacement cost. Are you getting it?
Yes.
Yeah.
So if it is yes, then you have to buy at the replacement cost. Because should I use it, I'll buy it immediately. So you buy at the replacement cost. Now, if it is no, if it is not used regularly, then you also need to ask yourself another question. The question you have to ask yourself is that, does it have alternative use? Are you getting it? Does it have alternative use? Does it have alternative use? So if the material, you ask yourself whether it has alternative use or not, that one too, the answer will be a no and a yes, right?
Yes, sir.
So if it is no, it means it doesn't have any alternative use. So if it doesn't have any alternative use, how will you value it? The material is there, it is useless. You are going to throw it away. So how will you value it? You will value it at what? The scrap value. Is that clear?
Yeah.
But if it has alternative use, then you look at the benefit from that alternative use and the benefit from what you are using now and choose the higher one. Is that not it?
Yes, sir.
Are you getting the point? So
Yes.
you choose the higher of the scrap value, and what? The alternative, which you call what you've been calling the opportunity cost. Are you getting it?
Yes.
Because if I can use the material to do something else, then I'll ask myself, what is the benefit I'll get from that thing? And then the scrap value, the two of them, the one that is higher, that's what I'll choose. Because I want to make profit. Are you getting the point?
Yes.
So anytime you want to value material, this is the clue that must be in your head. You first ask yourself that this particular material they are talking about, do I have enough of them in stock? If I don't have them, then straight away I have to go and buy. So I'll value it at the replacement cost. Are you getting it?
Yeah.
But if the material is in there, if it is in there, I have some over there. I'll ask myself that, hey, the one I have over there, is it occupied? Is it something that I've been using every day? If it is something that I've been using every day, then quickly I have to go and buy. Is that right?
Yes, yes.
But if I don't use it every day, it's not every day that I use it. I'll ask myself that, does it have any alternative use? Can I use it for something else? If I can't use it for anything and if it's useless at all, then I'll value it at the scrap. But if I can use it for something else, then I'll compare that something else, the benefit I'll get from it, and the scrap value, and choose the higher one. Are you getting the point?
Yes, sir.
So this is how you deal with material. If you memorize this diagram, you are good to go, because any question you get on material, come on, this will make it better for you. Are you getting it?
Yeah.
Yes.
Good. So that is the game. Then let's look at labor. A minute. Let me just take this medicine. A minute. Can we move on?
Yes, sir. Yes, sir.
Okay, then let's look at the relevant cost of labor. Relevant cost of labor. Now, labor, the normal wage rate you pay for labor per hour, they will tell you labor is paid 20 cedis per hour, or that's the variable cost of labor. It is relevant. So variable cost of labor is relevant. Then if you have loss contribution as a result of diverting labor, if you divert your labor from one job to another job, then the benefit you are losing from that job is a loss contribution. Is that clear?
Yes,
So
yes.
loss contribution from diverting labor from another work. Now, anytime you have spare capacity, maybe your labor is supposed to work for 20 hours a day, and then they've worked for 15 hours. You have already been paying them for 20 hours. But on a particular day, they've done normal work for 15 hours, and then you are left with 5 hours. The 5 hours, if they do extra work, will it come with an extra pay?
No, no.
Yes. So we are saying that where there is spare capacity, relevant cost of labor is 0. Relevant cost will be equal to 0. That means you don't incur anything. Then other things like redundancy cost. Once you put labor on redundancy, you have to pay some redundancy cost. It's relevant. Professional fees. Sometimes when you are working, you have to go and hire a professional to give you advice on some aspect. Professional fees is relevant. So let's look at this. Fixed monthly salary. Your monthly salary that is fixed. Is it relevant? It's not relevant.
Yes.
No,
It's not relevant because
it's
it
not.
will not affect the decision. Whether decision A or decision B, you will still pay that employee's monthly salary. Whether you use the employee for particular work or you don't use him for a particular work, at the end of the day, his fixed monthly salary, you pay it. So when you are making decision, you don't include that one because it is not relevant to the decision. Is that clear?
Oh, okay.
Then we can also look at relevant cost of overhead. Relevant cost of overhead. Relevant cost of overhead. Yes, relevant cost of overhead. That one to the normal cost of overhead, maybe 10 cedis per labor hour or 10 cedis per machine hour. The variable cost of overhead is also relevant. Variable cost of overhead. The variable cost of overhead. Then if you have any incremental or additional fixed cost, any incremental or additional fixed overhead, any incremental or additional fixed cost is also relevant. Then a specific fixed cost. You remember when we were talking about relevant cost, you saw all this specific fixed cost and then incremental cost. You saw all that.
Yes.
Yes. Loss contribution, all of this.
Now note this. Note this. All absorbed fixed cost. Absorbed fixed cost. All absorbed fixed costs are irrelevant. They are not relevant to the decision. Then if you see a share of fixed cost is also irrelevant. So whilst you are dealing with overheads, when you see fixed cost and that kind of thing, you should know that they are not relevant. Yes, so we will use these things to measure our material cost, our labor cost, and then our variable overhead cost in that order when we start solving the questions on Thursday. So please, these things that I'm informing you, it means you have to take a look at them and then read them before we come on Thursday. Are you getting the point?
Yes, sir.
Yes, please.
Okay. And so let's also look at the decision-making rules. Let's look at decision-making rules. Decision-making rules. The rules you will use to make the decision. There are types of decision. The first type of decision you can see is what we call a shutdown decision. Shutdown decision. Or we also call it deleting a segment. Deleting a segment of a business. When you are deleting a segment of a business or you are closing down a session, deleting a segment of a business, or dropping a product line. When you want to drop a particular product line, dropping a product line, all this relates to the same thing. It's either you are closing an aspect of a business or you are dropping a product. Maybe you have several products you are producing. Some of them are not favorable and you are thinking of dropping them. What you must do is that you assess for contribution. So the rule is that you must assess for contribution. You will check whether that department is giving you contribution or not. Don't focus on the profit. In decision making, we normally refer to what we call marginal costing techniques. Marginal costing techniques, we do not give importance to fixed costs. Are you getting the point? Fixed cost is not relevant in decision making. So we normally focus on contribution. That is sales minus relevant costs. So you assess the business for contribution. If it makes contribution, then you have to keep it. Are you getting it? So the decision is that you keep the segment or the product line. You keep the segment or the product line. You keep the segment or the product line if it generates contribution.
Sir, but if it's not still meeting my fixed cost, I should keep it.
If it's not what?
If it's not meeting my fixed cost, I should still keep it like that.
Exactly. That's what I'm saying, that you should assess it for only contribution base, because the fixed cost, whether you drop that product or you don't drop it, you will still incur the fixed cost. Are you getting the point? That's why it's not relevant. It's like I'm producing 3 products, A, B, and C. I've been paying fixed cost of 10,000 a month. That fixed cost, I'll pay it. Whether I stop producing A or I continue to produce A, I'll still incur that fixed cost. Therefore, if I'm making decision on A, I must not consider the fixed cost. Are you getting the point?
Okay, so I get now the explanation.
Yes, if I'm making decision on A, I don't have to look at the fixed cost, because for the fixed cost, whether I produce or I don't produce, at the end of the day, I'll still pay. So something that if I produce or I don't produce, I'll pay. Why will I worry myself looking at it? I'll rather look at the other issues, whether it will give me a certain benefit. And that benefit is what we call contribution. That means benefit that doesn't take into account fixed cost. Are you getting the point? Are you getting the point?
Yes, please.
Yes.
Okay. So that is. Now, assuming there are several products, and all of them is giving you contribution. Assuming there are several products. And all products generate contribution. If they all generate contribution, but maybe your resource is not enough and you want to drop some, what will you do? What do you think you must do?
You drop
What do
the
you,
You
one
have
that
to
you
read
lower
the
contribution.
options and see which one is giving
very
you
good.
contribution.
Very good. I said all of them is giving you contribution. All of them are
So
generating
the
gain.
higher contribution.
Very good. Very good. Very good. So you choose products with higher contribution. You choose products with higher contribution in descending order. That means from the highest to the lowest. Are you getting it? The one that will give you more contribution in that order. So that is what you do. Are we fine?
Yes.
Yes, sir.
So that's what we call shutdown decision. Then we also have what we call a make or buy decision. Make or buy decision. Make or buy means whether you make the product in-house or you buy it. And others also call it outsourcing decision. Outsourcing decision. Now, what this? If I make the product in-house, I'll still sell and get my revenue. So I'll get the revenue, I'll still incur costs. If I buy the product from an external supplier, I'll still sell and get the same revenue. And I'll also incur costs. Are you getting it? So the point is that for the revenue, for the revenue, it will be the same because if you've been selling the product 10 cedis, you will still sell it 10 cedis. Are you getting the point?
Yes.
Yes,
So
sir.
it will be the same, irrespective of whether we buy, whether we make or we buy. So if the revenue will be the same, whether you make or you buy, is the revenue relevant? Is it relevant? It
No.
will not
It's
change
not.
whether you make or buy. So is it relevant?
No.
No.
Yes. So it means that the revenue is not what? Relevant. So you don't consider the revenue when you are making this decision. Because as for the revenue, whether I buy it from the person or I produce it myself, at the end of the day, I will still sell and get my money. So the revenue is not important. But the costs, look at this, the costs. When you make, the cost will be different. When you buy it, the cost will be different. Are you getting it? So cost of making is normally different from the cost of buying. So since the cost of making is different from the cost of buying, it means I have to consider the two costs and choose the one that will give me lower cost. Is that not it?
Yes.
Is that not it? As a
Yes.
wise businessman, I would compare the two costs and choose the one that will give me lower cost. So what it means is that the decision rule should be this. The decision rule, what you consider to take the decision is this. You calculate the cost of buying. But when you are calculating the cost of buying, you are not taking all costs. You are taking only the relevant costs. Do you understand?
Yes.
Remember, we are doing decision making. Anytime you are confronted with a decision, the costs that you consider are what? Relevant costs. Am I making sense?
Yes.
So you take relevant cost of making, what we call avoidable cost. Another name for it is avoidable cost. So avoidable cost of making against avoidable cost of buying. You calculate avoidable cost of making and then avoidable cost of buying. Then the two of them, what do you choose? You choose the one that will give you what? Lower cost. Are you getting the point?
Yes, sir.
Are we getting the point?
Yes,
Yes,
sir.
sir.
If you know the decision-making rules, when you meet a question, you don't struggle at all. So make or buy, we'll take relevant cost of making against relevant cost of buying. Then we choose the one that will give us lower cost. Then you have another one we call special order decision. Special order decision. Special order decision simply means whether you should accept or reject a special order. Whether you should accept or reject a special order. Somebody has given you a contract. Are you going to accept the contract or reject it? what you are going to do is that if I accept the contract, I'll sell and make revenue. I will also incur costs in accepting that contract. So to decide whether I have to accept the contract, I will have to test the revenue against the cost. So revenue, I'll test revenue against the cost. So if I'm taking costs, what type of cost will I take? I'm comparing revenue and cost. So what type of cost should I take?
The lower cost.
Hey, it's only one contract. Are you following the lesson? Only one contract. And then you are
The
deciding.
relevant cost.
So you've taken the revenue you get from the contract. And I'm saying you have to compare it to the cost of the contract. But if you are taking the cost of the contract, what cost will you take? The relevant cost.
Relevant cost. Relevant cost.
So relevant cost of the order. You compare the revenue to the relevant cost. If it gives you contribution, then you accept. If it doesn't give you contribution, you reject. So you see, you accept if it generates contribution. You accept it if it generates contribution. And if it doesn't generate contribution, then you reject it. Are you getting the point?
Yes.
Then the last one you should look at is what we call limiting factor decision. Limiting factor decision. Now, in limiting factor, what we mean is that the objective of doing limiting factor analysis is we have a constraint, a resource limitation. Maybe our labor hours is not enough, or our machine hours is not enough, or the materials are in short supply. So the business has a constraint. So we want to see that under that scarce constraint, how can we produce that will make the maximum benefit? Are you getting the point?
Yes, sir.
Yes.
If your material is in short supply, or your labor is not enough, or your machine hours is not enough, and you are producing different types of products, do you just produce anything at all you want?
No, sir.
You have to check your resource against each of the products. Remember that all the products do not have the same selling price and the same cost. All of them have different selling price and different costs. So you assess that all of them, should I use the limited resource to produce them and sell? Which one will give me the greatest benefit? Are you getting it?
Yes.
Yes.
So I'm going to produce according to which one will give me the greatest benefit from the scarce resource. So we are saying that we want to produce according to which products will generate the highest benefit. Benefit in decision making, we call it what? Contribution. So the highest contribution per the scarce resource. The scarce resource is what we call limiting factor, per limiting factor. Are you getting the point?
Yes.
The one that will give us the biggest contribution from that scarce resource. And so this is the steps you take in limiting factor decision. These are the steps you take. The first thing you do is that you have to test all the resources and identify the limiting factor. I mean, all the resources you have to test all of them for production to see which one is in shortage. The one that is in shortage is the limiting factor. So when you see the one that is in shortage, the limiting factor, now you perform contribution analysis for all of them. You perform contribution analysis for all of them. You will do contribution for each product. So you do contribution for each product to see which of the product is giving the highest contribution. Not just the highest contribution, but the highest contribution from the scarce resource. So we now say you calculate the contribution per limiting factor. That means the contribution from the scarce resource. Which of them will give us the biggest benefit from the scarce resource? Not the biggest benefit as a whole, but from the scarce resource. Exactly.
Yeah.
Once you have done that, then you rank them. So you rank the products according to which one is giving you the highest contribution per limiting factor. Then when you rank them, then now you produce according to the rank. So that's what we call, you determine the optimum production plan. When we start calculating, you will see it's very, very easy. You determine the optimum production plan. Then based on that plan, you can now calculate the maximum possible profit. Based on that plan, you can now calculate the maximum possible profit. You can now calculate the maximum possible profit. Maximum possible profit. So that is that. If we have gotten this, as for CVP, it's on its own. So when we get to CVP, we'll see what to do. So the maximum possible profit. That is that. So we have succeeded in answering the question on the budgeting. We have also succeeded in learning about decision making. What have we learned about decision making? Hello?
Yes, yes.
We are coming to the end of the lesson. We are coming to the end of the lesson. So those of you who have muted yourself, let's hear from you. Those who have muted themselves, yes. Antina, Emmanuel Asari, Erika Nani, Francis Odum, Julius Bliss, Kweku, Adi, Michael, Ayimpusa, Phil, and the rest. Silas Boatin, Reina, Prince Hoodbrook, on the rest. Let's hear from you because we are getting to the end. Yes.
So I keep asking myself that, have you seen, if we want to take what you have run at the one you taught right now, say we've landed on a particular product that we think that compare this to this one's making profit, and we want to choose that one and produce. When the other factors that we learned before this influence even the one that we have, and we think that that one will be easy for us to produce and get more profit.
Excellent. That's why I'm saying that those factors, the question will not tell you. So the one that the question didn't tell you, you don't assume for the question. Are you getting the point?
Okay.
The question,
Yes.
the question is given to you on the basis that all factors being equal. But then, if you solve, we are saying that when you have made the decision, you've concluded, you have to suggest some of the factors that can affect that decision. Are you getting the point?
Okay. Yes.
Yes, sir.
As for the question, when it gives you, it will not give you those factors. You will calculate it raw based on the information given to you. But I'm saying that as a management accountant, when you have calculated and you've concluded, at least let us know what the threats could be so that when we are taking that decision, we can safeguard ourselves against that threat. Are you getting it?
Yes.
If you have the chance to solve every problem, what will you do? You look at the one that will give you the highest benefit, and then you manage the threats that will come with it. Exactly.
Yeah.
Okay.
All right. So we have learned decision making. In decision making, what did we do? We learned about what we call relevant costs, that it is not all costs that we use in decision making. We only use relevant costs. What are the relevant costs we learned? We said variable costs, incremental fixed costs, specific fixed costs, differential costs, opportunity costs, loss contribution. You remember all those things? You remember all those things?
Yes.
Yes.
Then we came,
Yes, sir.
then we came to looking at
cost.
relevant cost of material. Relevant cost of material, we said you first have to ask yourself a question. That is the material in stock? If the material is not in stock, then you have to go and buy.
Replacement cost.
If it is in cost, then stock, then you ask yourself a question. That is it regularly used? If it is used regularly, then you have to go and buy at the replacement cost. If it is not used regularly, then you ask yourself a question that does it have any alternative use? If it doesn't have any alternative use, then it means the material is useless. So you value it as scrap. But if it has alternative use, then we look at the benefit of alternative use and then the other the scrap value too, and take the higher one. Is that not it?
Yes.
Then we came to labor. We said the relevant cost of labor is the normal variable cost of labor. Then we also talked about what?
Loss contribution.
We talk about loss contribution. Now let me go back to the variable cost of labor. There are some things I may need to add. The variable cost of labor, let me go back there. Variable cost of labor. Yes, the relevant cost of here. Now, We talked about the normal variable cost of labor. We said if you divert labor from another work, then the loss contribution there is relevant. But where there is spare capacity, relevant cost is zero. Then redundancy cost and professional fees. And you know, other incentives like overtime and the rest. Is that clear?
Yeah.
There's other incentives like overtime and the rest. They are also relevant. Overtime are also relevant. So add that. Other incentives like overtime is also relevant. If there will be the need for overtime to be done, it means the overtime cost is also relevant. Are you getting it?
Yeah.
Then we talked about relevant cost of overhead too. We said the variable cost of overhead, mental fixed cost,
we don't know the time that they will come.
we said all absorbed fixed costs are irrelevant and that kind of thing. When we talked about that, then we came to the decision-making rules. So the decision-making rules, we saw the first one to be what? The decision-making rules. The first one, we saw it to what?
Shut down
Drop
decision
decision.
or deleting
When you
the
want to
segment
shut
of
down,
business.
when you want to shut down, what do? You assess it for contribution. If it makes contribution, you keep it. If it doesn't make contribution, you shut it down. And perhaps you tell us some of the qualitative issues. Look, if assuming I'm shutting down that segment of the business, yes, I have taken a decision that it is better to shut down. But some of the qualitative issues could also be that if I should shut down, do you know that it can also affect staff turnover? Are you aware?
Yes.
Well, imagine you are working in a particular bank, especially between the period 2017 to 2019, 2020, thereabout, when we had the banking
Yes,
sector,
the crisis.
a lot of
Yes.
banks were collapsing.
We
Assuming
are
you
all
are working in
victims.
a bank, you are an employee, you are not part of the board of directors, you are not part of the strategic unit of the bank to know whether the bank's financial position is good or not. And suddenly you see that your bank is closing some of the branches. What comes into your mind?
You have to make a decision to leave.
Exactly. You know.
Start looking for another job.
Exactly. You know that there is banking crisis in the country. Some banks are collapsing. Then all of a sudden you saw that your own company, you have about, let's say, 20 branches. Recently, they've closed 7. Then last week, they just closed another one, 8. Today, no, they've announced that another one, 9. And you are a human being and you still sit down thinking that, oh, it will be well. Finally, everything collapsed. You quickly start looking for a new job. So we are saying that when you shut down a segment of the business, it is possible it can affect staff turnover and then the rest. Are you getting it?
Yes, sir.
Yes, sir.
Good. So when we get there, we'll see qualitative issues. Then we talk about make or buy decision. Make or buy decision. He said, are you making the product or you are buying it? Whether you make or you buy, you will still generate the revenue. The price you will sell it will be the same. So the revenue may not be relevant. But then what you rather need to think about is what is the relevant cost of making against the relevant cost of buying. Then you choose the one that will give you, smaller
lower cost.
Then we talked about special order decision. Yes, special order decision. What did we see? We
Terms
said
of debt.
accept the special order. You have to run it on
And
contribution.
contribution.
If you run contribution analysis and it gives you contribution, you accept. If it doesn't give you contribution, you do what? You reject. That kind of thing. Then we talk about limiting factor. We said limiting factor, you have to produce according to which of the products will give you the highest contribution per limiting factor. Is that right?
Yes.
Yes, sir.
So you identify all the products, you test the scarce resources against all of them to know which one is actually in short supply. The one that is in short supply is the limiting factor. Then you perform contribution analysis for each product. Then you calculate contribution per limiting factor. So the contribution per limiting factor will tell you which product is more beneficial from the scarce resource. Are we okay?
Yes, sir.
Once you have done
Yes.
that, you rank the products. You rank the products, tell us which one is better, first, second, third in that order. After you've ranked them, then you produce them according to the rank. So producing them according to the rank is what we call, you are determining the optimum production plan. Optimum production plan. Please, the word is optimum production plan. Optimum production plan. So you determine the optimum production plan. Once you have done that, based on that production plan, you calculate the maximum possible profit. Are we okay?
Yes.
Yes, sir.
So I expect that it's been a long journey on budgeting. I think our budgeting has been well strengthened. Now, when you meet functional budget, you won't fear. should you even see? And at your level, it's possible they may not give you just a simple functional budget for you to analyze. No, maybe you have to do the functional budget to determine the sales and the production and use them to prepare a master budget. Sometimes they can also be fair to you and then maybe just throw you some functional budget to test your understanding. So strengthen your functional budget, your flexible and flex budget, and then your whatever master budget. Make sure that you have them well. And then there are some theories on budgeting. Make sure you read the theories. Get the ICA manual. Listen carefully to me. Get a copy of the ICA manual. Under budgeting, there are some theories under budgeting. The theories under budgeting, read them. They can surprise you. They can give you some small calculation, then they put some theories in. Anytime theories are examined, the students are not able to solve the theories. Read the theories there. I'm sure your tutors from various facilitation centers might have taught you the budgeting. They might have discussed the theories with you. I'm begging you. Rush hour is just to give you insight into solving these past questions. So go through the theories and understand them. We are supposed to be solving past questions, but I have used the rest of the period to explain decision making to you, because the point is that how will you understand if I come solving decision making and I have not taught you how to analyze them? Are you getting the point?
Yeah, it's true. Thank you very much. Thank you very much.
I pick a question, make or buy, and I start solving. And I don't let you know that you have to compare relevant cost of making and relevant cost of buying. How will you understand it? And so I the time very tactically that the last meeting we will solve the question on private medical practice. The rest of the time we'll familiarize ourselves with the decision-making rules. I expect you to go and sit down, look at them carefully. I have said that if you want to become an accountant and you can't sit down for 3 hours, 4 hours learning and analyzing what to do, then my brother, I'm sorry. You will spend a long time in IC. If you are not careful, your son will go and come and chatter whilst you have not been able to chatter. If you cannot sit down for 3, 4 hours learning, look, there are people who have written this IC, some of them for 7 years, 8 years, they are still not being able to chatter. Not because they are not intelligent. Get to know that everybody who is writing this ICA paper is a very learned person, because if the person is not academically inclined, you won't even venture coming to write ICA. ICA is the most difficult professional course. I'm telling you the fact.
True.
If you look at all the courses from level 1,
it's true.
ICA is the most difficult professional course. Look, if you finish ICA and you are going to write CIMA, you are writing only one paper, only their strategic case study. So CIMA, and Kasa Bebre, at the end of ICA, you are just going to write just one paper. CIT, when you finish ICA, you are going to write just 6 papers. First 3, final level 1, second 3, final level 2. And so if you finish ICA and you are very strategic, within the next 2 years, you can get 3 or 4 more professional qualifications. And this will be beneficial to you in future. And so something that you are doing, that you are aware tomorrow, it will give you benefit. Have time for it. Those who have been failing, it is not because they are not intelligent. It is mostly because they do not find adequate time to revise properly what they have been taught. You cannot eat your cake and have it back. I have spent time to teach you and explain the decision-making techniques for you, so that when we come solving the past questions, you will not be found wanting. All I expect from you is to make time, go through them, familiarize yourself with these tools, and have them at your fingertips, so that when we come and we are solving the questions, it will move. That said, by 12 o'clock, I'll release the compilation on decision making for you. I've compiled the past questions, put them together. The past questions and some key questions in the question bank, I've put them together on a question by question basis. I'll release it to you, get a copy of it, print a hard copy, and be looking at it whilst we are solving. Familiarize yourself, and I believe that if we have done budgeting very well, if we do decision making very well, if we treat our variance very well, and we finish performance evaluation, then we have some 1 day to look at benchmarking, balance scorecard, value chain analysis, and then the rest. If you go and sit down in the exam, so trust me, even if the question comes from hell, you should be able to make your 50 marks. So don't take chances. Don't let the rush out be. In fact, I'll be very disappointed if after spending months waking up at 4 a.m. and teaching you at 4 a.m., solving past questions with you, and you go to the exam hall and you meet similar things you have solved early morning, and you are not able to take advantage of that and come out from this, break this deadlock of management accounting, then when else? On that note, we'll call it a day. We'll meet again on Thursday So then, may the good Lord be with us all.
Amen.
Thank you.
Thank you,
Amen.
sir.
Thank you very much, sir. Thank you. I'm going to work. Okay.
Mhm.